We have Dow S&P record highs on those strong retail sales numbers and some of the earnings as well. Chris Ailman joins us this morning to start the hour. CalSTRS Chief Investment Officer. Chris, great to have you back. Good morning.
Good morning, Carl. Good to see you.
I want to get you first on the eco data and the degree to which the bond market is not reacting violently to it. And I wonder if you think that means we could be in a bit of a range here for a while and the implications for equities as a result.
Well, right now we're in nirvana. Bonds are actually happy, which is surprising, and equities are through the roof. Bob Pisani said it right before the top of the hour. There are four things that drive stocks. The first two I would like to say are real earnings, but then you get down into liquidity, and that's the story. Liquidity, we're awash with liquidity. We're awash with optimism. I still think you're going to take your clue from the bond market, and I'm worried about that. It's going to back up again, and rates will probably leak a little bit higher. We're just borrowing too heavily in the market.
So do you see that being a liability, say, in the second half and in Q2? When does that happen?
Well, I think you're going to be talking to Rick Santini a lot in the coming months. It's hard to say exactly when. Somewhere out in Q3, probably beyond that. We're awash with liquidity, so there's plenty of money. But somebody has to pay for all this party, for all this liquidity. The deficits we're running are just ridiculous. And I don't want to be a downsayer on such an up day. But come on, you can't just flood and give people free money and then just flood the economy with zero interest rates forever. At some point, they've got to start backing up. Calling that's going to be tough. But I really think that a serious investor needs to take a clue from the bond market and just keep a real close eye on that. Earnings are important right now in this week, but watch the bond market.
Chris, I want to talk some crypto with you because I don't think you have any. You are a client of BlackRock, and we had Larry Fink on the show earlier this morning talking about what his clients are saying about crypto. Here's what he said.
I don't believe we should be focused. We should think about crypto as a substitute of currency, but it could. But I am fascinated by it as an asset class.
Chris, he said he's having minor conversations with clients about it. Does that describe your back and forth?
Yeah, it actually does. I had a chance to talk to Larry directly just a week ago. We didn't talk a lot about crypto, but it is on the research block for most institutions. A few of the endowments in the USA have dabbled in it, but right now it's all speculation. I think Larry's hitting it on the point. Is it an asset class? Or is it maybe a neutral currency, an alternative currency? People haven't really decided because we don't have long of a trading history. All we have is the speculative ramp up and down and then back up again. So it will be it's here to stay. And right now it's been traded like tulips. People will understand that reference. So long term, it probably has an interesting place in the currency markets. And maybe an asset class, I think it's more likely to be an alternative currency.
Chris, it's Morgan. In that interview, Fink also said that climate change and inflation risk, and I know we just talked a little bit about rates, but inflation risk are bigger concerns for BlackRock's institutional clients versus cryptocurrencies. Two topics that I know we've spoken to you about multiple times. How are you thinking about that, and how are you making investments based on particularly climate change and ESG more broadly on those areas?
Great question, Morgan. And that actually was what dominated my conversation with Larry, was climate change. We frankly made a $1 billion investment last week into a launch of an ETF that BlackRock had created that's going to focus in. It's an actively traded equity portfolio. And I'm normally a big passive investor, but I think in climate change, we're going to see companies that adapt and adjust, and then we're going to see other companies that stick their head in the ground. So listening to the words of CFOs and CEOs about who's actually changing and being aware, I think those companies are going to outperform going forward. And companies where they stick the head in the sand, we're going to engage and prod, but in this case, we're going to not own those stocks and try and tilt toward the more aggressive stocks. The world is going to have a dramatic change if we haven't already this year. Good Lord. But in the next 5 years, you're going to see dramatic changes need to happen on the climate change front, and you're going to continue to see aberrant weather around the world and here in the USA.
Shepard Smith here. Thanks for watching CNBC on YouTube.